What's going on, guys? Jason Turner with Navigator Mortgage Brokers. Want to do a Q&A style video today about a question that comes up a lot, and I'm sure like every home buyer, every homeowner, every person even looking at the market has a question. What lender do I use and why? So this specific question goes, when shopping rates and lenders, at what point do you choose which one to go with? Do you go purely off loan estimates, or do you start the whole process with your top choices? Basically, when do I have to make the final decision? When is it too late to change? This person is afraid to go with the best loan estimate because they're afraid of underwriting and closing it as good as promised, which is a very valid fear and something that I want to talk about in detail a little bit today, because a lot of times you get what you pay for when you are using a mortgage lender, right? There are good mortgage lenders, there's bad mortgage lenders, there's really bad mortgage lenders, and there's people who have the client's best interest in mind. And there's people who are very personable and very good at what they do while offering the best service and rate combination that they can do. One of the things that I tell a lot of my clients that I work with is ask people who you know and trust who they use and why. Why do you like using them? Did you have a good experience? Did you close on time? How quickly did everything move? Whether you're purchasing a house or you're refinancing a house, you want to make sure you have the best overall experience. A lot of times, like right now, as we stand here in September 8th, 2021, there's a lot of refinances going on. Rates are really low. People are comparing rates, trying to refinance to the best mortgage that they can get, right? The catch with rates is that sometimes lenders charge for those rates. They charge origination fees or discount points, as they're also known as, to give you that lower rate, which can add thousands of dollars to your closing costs, which you shouldn't pay, really. I mean, most of the time we have to look at the cost to recoup those fees, and doesn't make sense. The cost to recoup has to deal with how long you're going to be in the house compared to how much you're paying, and is what you're paying going to make up and the difference in the mortgage payment over time, basically. So if you're saving, $300, $500 a month, those fees, can be nice at a certain break-even point of, I don't know, maybe it's 12 months, maybe it's 36 months, depending on how things work out, right? So I like to tell people, look at box A in any kind of loan estimate. What does that say? Are there fees in there? Number one. If there are fees, how much are they? Are there origination fees? Okay, we have to look at those things. What are the total closing costs? Okay, and I want to say closing costs specifically because closing costs are different from escrows. So escrows are going to be the same regardless of what lender you choose, because they're your taxes and they're your insurance. They're literally things you already have. And so, sometimes lenders like to make their escrows look low, even though in reality, the title company that you work with in your particular county or state is going to help dictate, like, when the tax bills due, how much we need to collect for those purposes to make sure those respective things are paid on time, basically. So throw escrows kind of to the side and don't really look at escrows, because, like I said, they're going to be the same regardless. Look at the closing costs. Closing costs are going to be how you compare lender to lender, and specifically box A. Your transfer taxes are going to be the same no matter who you use, because those are an exact percentage set by the respective county that you're going to live in. The title attorney fees are things you can shop for, so you can shop for those. So if one lender's quoting a certain title company's fees and someone else is doing something different, that's your ability to choose who you want to go with. So if somebody has no fees in box A, there are no origination fees, but their title company fees are a little bit higher, you can say, hey, sir or ma'am, I would like to use XYZ title company because their fees are a little bit lower. Awesome. Give me their contact information. We'll give them a call and get that title order requested for you. That way you're getting the best deal as far as the rate and the fees go, no matter what. So that's something to keep in mind. And you have to go with your gut, essentially. If you're using a big mortgage company, you might not get the best service that you want to get. Right? That you may be just one of a million people that they're trying to work through, and you're not going to get personalized service. If you go with somebody locally, you're probably going to get a little bit more individualized service, which is going to be beneficial to you as far as like feeling good about the process, being able to contact your loan officer or processor, having some constant communication. and knowing when you're going to close, knowing all the information that you want to know, and all of those little nuances that go along with the process. That said, you have to go with your gut. You got to ask people. I highly recommend you get into Facebook groups to see who other people have used and call around. See who you like using. I mean, some people are big on their credit union or their bank, and that's all fine and good, but compare the terms. Are they responsive? Are they going to take 45 to 60 days to close, or are they going to take 30 days or less? I like to tell people closing quickly is the least amount of stress. Certainly that's what I try to aim for. Less stress, the better for everybody involved. So if you can close quickly, you can thread the documents, you can get it all knocked out quick and easy, then that's going to be the best for the consumer as well as the lender, because everything is just easier, basically. So just want to put that out there, regarding choosing a lender. Also, there's a difference between an actual like a mortgage broker and like a direct lender. So the differences are a broker works with multiple lenders, right? They can work with however many they want to. It can be 30, 50, whatever the case may be, and a broker shops the mortgage for you based on the best rate and terms that they can find for the consumer, right? So that's the advantage of working with a broker. A direct lender, they have like their own margins. They give you one rate, and whatever they offer, and that's what you get, basically. So if you go to a bank, if you go to a credit union, you're going to get that experience, right? But if you go to a broker, you're going to get a little bit different experience in that you're going to basically get your rate shop for you to make sure you get the best ideal terms as a consumer. So those are two critical points to distinguish between when you're choosing a lender, and make sure you ask those things as well, because they do make a difference. Not saying direct lenders are bad. Some of them are great, but some of them have higher margins and thus higher rates. So that's how that works. If there are any other questions, please let me know. Drop me a comment. Love to interact and engage with anybody about this topic, and I'm more than happy to see how I can help anyone. So take care. Have a good day.